Remember when politicians swore blind that foreigners wouldn't be allowed to buy up in New Zealand homes? Well, turns out if you've got 5 million, a shiny visa, and can fog a mirror, you're in. Kiwis are told to tighten belts, but overseas investors are handed the keys to the front door. To explain how this circus works and whether it's about to torch the property market all over again, we've hauled in ASB's Chief Economist, Nick Tuffley. He's next.
Financial freedom faster. Financial freedom faster.
Before we start, Mortgage HQ's snapshot has helped thousands of Kiwis stop renting, start investing, and see the game clearly. If you want the same clarity, it's waiting in the description below. Nick, let's start simple. Is this $5 million visa basically a giant for sale sign hanging over New Zealand housing?
Well, not really. I mean, that's $5 million purchase price for someone who will be bringing in an awful lot of money with them as well to invest in New Zealand. So what does it mean for New Zealand house prices? Does it mean that suddenly your block of investment property flats or your first home is suddenly going to shoot up in price because of this? Well, not really. We're talking about a very stratified part of the market, that sort of cliched 1%, where there might be, a few hundred extra people looking out, trying to buy a sort of like mansion or a holiday home somewhere. So it's really talking about a very specific part of the housing market where that impact will tend to be. So I think for most of us, we don't really need to be worrying about the impact that this will have on our lives in terms of what it does to our housing market. It's that real upper end where there's likely to be any impact, if at all. And you're not talking about many homes.
Yeah, well, $5 million sounds elite, but at the end of the day, it's probably just a Herne Bay do-up, isn't it?
Well, you'd probably be able to get a Herne Bay do-up with a decent garage, probably as well for that sort of price. But look, it is a level where there are still only going to be a relatively small percentage of New Zealanders who might find that they are competing with a foreign buyer. And look, we're not talking about large numbers, I would say, in the end, because it's not just anybody waltzing in with $5 million to spend on a house. It's people who have qualified for the investment visa, who are bringing a lot of cash in. So we're bringing in some fairly rarefied high net worth individuals. And the other thing we've got to remember is, it's like, why are we attracting these people? Because they've either got some really key valuable talents that we can make use of, or they bring a lot of money that they can invest into New Zealand businesses and provide capital here. And look, we do need that. We're a nation of net debtors, where we borrow more than what we save offshore. We have more people investing in New Zealand than overseas. It's been I guess you could say, a choice that we have preferred to have, where we've preferred to spend today rather than save for tomorrow. And we do need people to help finance growth in our businesses, our corporates, and even the government getting support with its spending on infrastructure, and even just its more general borrowing requirements that it needs just to keep the lights on as a government.
So the way you're talking, you're quite convinced that this will grow the economy.
I think it's a net benefit to the economy from doing this, because what it's doing is it's taking away a roadblock to attracting some people to New Zealand who will be bringing some valuable skills or some much needed investment cash. Now, we're up against other countries like Australia, Canada, where they have, the attractions of, a developed economy, lots of investment opportunities. Canada's got its lifestyle opportunities there. Australia's got its warm climate and its beaches. It's offering something. And both of those actually have like a higher living standard than us as well. So we're competing with them. And if we're putting up these roadblocks to some quite valuable people coming in, we're just going to be reducing our share of that pool of people who are looking around for somewhere else to live for lifestyle purposes or a change of pace. And let's face it, at the moment in the US, apparently, there's supposed to be a few people who have voted to leave since Donald Trump came in. So, we want to roll the welcome mat out for them rather than put up the steel bars and the big padlock.
How do we address the elephant in the room, which is confidence, which is exactly what you're saying? What needs to turn around?
Look, I think confidence, it is that, a bit chicken and egg in some ways. But what's going to help drive confidence? I think for people, it's generally having more certainty about the environment. We're a lot more certain and confident when things have started to pick up, and that's sort of one of the challenges. At the moment, it feels like everybody's sort of looking sideways at the person next to them and sort of politely saying, sort of after you, and sort of waiting for someone else to do something. So look, it is really important in general. We're in an environment where, when you sort of look around at the moment, with what's happening globally, for one, that's getting a lot of it airtime. Donald Trump's doing this, Donald Trump's doing that. Some of that noise has settled down a little bit.
Yeah, it has become white noise though, hasn't it? Let's be honest. It's in the first term it was that all the time, but second term it's a case of we're expecting this and the world goes on.
I think to a degree, yes. I think when you get Donald Trump, you always expect something that looks like it should be in some sort of cheesy sort of TV soap opera. But at the same time, he has really surprised by how far he's pushed. I mean, people expected him to, make noises around tariffs and look at them, but the extent to which he has put in place tariffs and how high they are in some cases, and how prepared he has been to sort of upend relationships with countries, has been quite a revelation. And look, the thing is that it's just that general uncertainty that he's created for a while, where countries haven't known quite what tariff they are facing. And even from a New Zealand point of view, we finally found out that we're getting a 15% tariff from the US instead of the 10% initially proposed. But we still don't really quite know yet, where is China going to end up. And China is our biggest single export destination. So how China will be affected by tariffs, how it responds to it to shore up its growth, those things, we've still got some unanswered questions.
Yeah, Nick, what about the fact that he's putting so much pressure on the Fed at the moment? That's got to have jitters as well for us.
Look, it does really sort of flag that importance of, politicians sort of keeping out of monetary policy and letting the central banks do the job that governments have given to them, which is keep inflation under control. And I think in the US, obviously Donald Trump, he wants the economy to fire up. He's there to make it grow, baby, grow. And he's been pushing very hard for low interest rates and been very meddlesome. He's trying to basically coerce people to leave the Fed so he can put in appointees that are more in tune with him. So what can that matter for interest rates? Well, the thing is like, we did learn that hard lesson about inflation, that there's no free lunch with inflation. You either end up with higher costs that you end up personally paying, or you can actually end up with interest rates being a bit higher than they otherwise would be, and that affects your debt servicing ability as well. And if Donald Trump sort of undermines the credibility of the Reserve Bank, then people's perceptions around future inflation will change. They will start to factor in higher inflation. They'll potentially start to factor in that interest rates, whilst they might be a bit lower in the short term, there'll probably be some payback later on down with interest rates being a bit higher. And you don't really want politicians to be creating the sort of uncertainty that builds that uncertainty premium into your interest rates and unnecessarily pushes them up. So that's sort of like the risk with what we are seeing. Yes, people are more excited that the Federal Reserve might drop interest rates in the short term. That flows through to us. It affects some of our short-term interest rates a little bit. But if there's that concern that in the future in the US that inflation will be higher, that pushes up long-term interest rates. And that sort of does have impacts on our own government's ability to finance. And it does impact if banks are going offshore and looking for a lot of long-term funding to help fund their lending, then it can impact on the cost of that as well. So this stuff matters. And that's one of the issues with Donald Trump, where he's sort of eroding the integrity of government institutions in the US. And, that does have a longer term cost, even if he may see some short-term gain in it.
It's history shows though, Nick, every time foreigners step in, supply never keeps up.
Well, what we've got to remember is we're talking about quality versus quantity, in the sense that the sorts of people who are, one, coming in under that visa, and two, allowed to buy that property, we're talking about a relatively small number. It's a bit different from that sort of era that we were looking at, say, up to 10 years ago, when we were, saying it was the foreigners coming in, buying up all the property that was driving up the up the prices. In the end, it proved to be that the numbers were very small. And as we learned during the COVID lockdown period where we closed the borders, we're quite capable of having like one of the biggest booms in decades without any population growth whatsoever. So, sure, if you've got a big flood of people coming in all at once, that can put pressure on the market. I mean, it's no coincidence that often housing booms do coincide with a strong net migration boom, but there's often other reasons in the background coming through. And it does come back to things like, well, okay, prices going up is a sign that there's more people wanting to buy something than we've made available. And one thing that we are fantastic at doing here in New Zealand is artificially constraining the supply of new homes. We make it very expensive, very difficult, and very uncertain to build new homes in New Zealand. With our small population and our large landmass, it's amazing how expensive we've managed to make homes. And part of the challenge for New Zealand is it's not so much around necessarily addressing the demand side. Like, more fundamentally, we've got to keep looking at how do we make it easier and cheaper and quicker to build, decent homes here in New Zealand as well.
In 5 years' time, are we going to be thanking these foreign investors for saving the economy or blowing it up?
I think on balance, we'll be thanking them. The sorts of the numbers that we're getting in, it's not like we're going to suddenly find that sort of every small plot of land in New Zealand is going to suddenly be worth over $5 million because there's been a flock of people coming in. But it's that bang for buck that they can bring in. And like, to pull out some very sort of semi-obscure examples, think about James Cameron, who's come in, basically established himself in New Zealand. Look, yes, he has bought some property, shock horror here, but sort of think about all the added business that he is bringing into the New Zealand economy. We go back in time, we had Julian Robertson, the US fund manager, who was, had quite a passion for New Zealand, set up golf courses, donated art, other things like that of a very philanthropic nature as well. Those are some very obscure examples, but on a slightly smaller scale than that, look, all those people make a difference.
Nick Tuffley, ASB Chief Economist, thank you for your time.
Pleasure.
Before we go, you don't want motivation, you want ammunition, moves that work, tactics that win. The 3 property formula is the playbook that smart Kiwis are already using while the rest are still refreshing Trade Me and panicking at interest rates. No fluff, no webinars, no BS, just results from the front lines. Written by old mate Andrew Malcolm. Get the strategy, own the edge. Grab the book before someone else buys your future.